Welcome to the Tax Sale Podcast, where tax sale investing is made easy. My name is Casey Denman. I'm a tax sale veteran. I'm the leading tax sale expert. I'm the author of the Tax Sale Playbook, founder of the Tax Sale Academy, and I am your host right here on the Tax Sale Podcast. Thank you so much for joining us on today's podcast episode. As a reminder, this is a completely free podcast brought to you through and because of the Tax Sale Academy. So if you are looking to learn more about investing in tax liens and tax deeds, make sure you check us out at taxsaleacademy.com. All right, today I want to discuss a few lessons that I have learned over the years. So as many of you probably know, I've been investing in tax shelter real estate for over 20 years now. And I've done it in hundreds of different markets throughout all types of economies, including the insane market highs and the lows of 2008 and everything in between. In addition to that, since 2011, I've been providing training to many new investors. This has allowed me to have thousands of conversations, to hear many stories, and to learn quite a bit through other people. So I wanted to go over some of the lessons that I've learned over the years today so that hopefully you can leverage my experience to help shortcut your path to tax sale success. So let's get to it. The first one is every market is different. That's a very important lesson. This is difficult to comprehend at first until you realize that you've made a major mistake and you realize that you've been naive assuming that every single market is the same. You think to yourself, of course, every market's different. We know this, right? Different places, right? But I'm talking about far beyond the geographical conditions. I'm talking about beyond the changes in values, design, that kind of stuff. I'm talking about their traditions, their customs. What is the norm for the area? I never realized that some cities require inspections upon the sale of every single structure inside of their city limits until I started investing in areas like that. Same can be said that some have rather strict snow shoveling requirements. Who would have thought that if you live in Florida? That some have citywide ordinance rental limits. So the number has to go below a certain number before you can offer your property as a rental. Some areas don't typically have inside toilets. Some areas hate outside investors. Some areas do this, some areas do that. The list of differences go far beyond just a quick market comparison. Until you've taken the time to ingrain yourself with what happens in a new market, you will not have any idea what's coming when you begin to invest in new cities, especially when they're in different parts of the country. So understand this and take your time to really research in depth before you think about investing somewhere new. The next lesson is that the successful investors are always learning. There are many people that I've seen in this business over the years. They've just fallen by the wayside. And oftentimes it's because they try doing the same thing over and over for years and years and years. If it works today, that's great. But there's no guarantee it's going to work in 6 months or a year from now. And it's hard to understand that while you're ingrained in the trenches. While you're working one strategy to maximize that strategy, it's difficult to realize it's not working as well as it once was. And you think you just need to work harder at it when you might need to change direction and learn new ways to deal with your tax sale business. But the investors that I remember seeing 2 decades ago that I still see to this day, they are the ones that have learned and they've changed their business, how they operate it over time based on the market and technology and lots of other things. Sure, their core business might be the same, but they learn what's working now and they've implemented it into their core business. One of the biggest examples is the way that we market properties now. I remember back in the day when I first got started, putting a sign out on a property was a big deal. You need to get that sign out as fast as possible, get all that drive-by traffic, right? That was marketing back then. Now, most of my properties, I do not have signs on. Instead, I turn to the internet to market my properties, something that was not common back then. Commit to constant learning and you will go far in this business. The next lesson is to understand that people take different approaches than you probably take, and that's okay. You know, I posted a video a couple of weeks ago about a suggestion that I had to brand new tax sale investors to not remodel tax sale homes. So In short, the gist of the video was that if you're a brand new investor learning how to invest in tax sheltered real estate, you don't need to create essentially a completely side business of learning how to deal with remodels and contractors and tying up your money for 6, 9, 12 months and handling that whole mess when you can just go all in on tax sale investing and probably flip 3 or 5 properties using that same exact money in the same time it would have taken you to remodel that house. But I got so many messages from people telling me, Casey, you are wrong. To be fair, I kind of expected, I knew it was probably a controversial opinion, but at the end of the day, I wasn't wrong. And neither is somebody who does remodel a house. It always makes me laugh when people say that you are investing money wrong. Really? Different strategies does not necessarily mean that it is wrong. You will never know somebody's motivation, their specific strategies, the behind the scenes stuff, how their lifestyle impacts their strategies, and about 1,000 other things about how people approach their businesses. Don't question the strategies that other people are using because it might just be working very, very well for them. The next lesson, don't make it a race to the bottom. When you have a whole slew of people wanting to do the exact same thing, that person that does it the cheapest is going to be the one that, in quote, wins. Of course, in short, everybody loses. So in other words, if every single person is wanting to buy the same exact property, market that same exact property the same way, then the person willing to accept the lowest profit margin is going to be the winner of that property. That's it. When you realize it's a race to the bottom, you will soon find out that you need to take a different angle unless you want to get caught up in that mess. Maybe your different angle is just going to a market with less competition so there aren't as many people racing to the bottom. Maybe it's going to more auctions, watching more properties be sold. Maybe it's marketing your properties differently. Maybe it's transitioning into a different property type. Maybe it is whatever other strategy you come up with. Understand though that if you plan to do it the exact same way as everybody else, I hope you're willing to do it for very little money. Instead, take a different approach than the other people. The next lesson is that you don't know what you don't know. But the more you know, the better. I read about this in part in Tax Sale Playbook. A couple of years after I got into the tax sale business, I was absolutely crushing it. I was killing it. I was virtually a child making mid-six figures, and I thought I knew everything. That was before the global financial crisis, when everybody stopped buying what I was selling, and when my income took a nosedive off of a cliff at a very high rate of speed. I realized there was plenty in this business that I didn't know. While experience will teach you many things in a very, very painful way, you can also educate yourself through research, through asking questions, through formal training like we have in the Tax Sale Academy and many other places. Don't be a know-it-all like I was, or the world will quickly put you back into your place. Side note here, that was actually the best lesson of my life. It taught me a lot. The next lesson is that mistakes will happen. If you're a successful investor, then you will likely have done enough deals to make a miscalculation on at least one of them. It's just the nature of the business. It could literally be a miscalculation like a valuation, or it might have been something where you just overlooked a major issue by mistake. Whatever the case, it's important that you immediately take care of those mistakes and attempt to minimize the damage that it will do. Additionally, you must take the time to really analyze that mistake, to learn from it, to study it, and to utilize it so you don't make the same mistake or a similar mistake in the future. Early in my career, I bought a house that was torn down by the city a week later. Was it a mistake? Yeah, absolutely. But it was a huge lesson to make sure I checked the demolition list prior to buying structures. And guess what? I've not made that mistake since. Know the mistakes will come as a tax sale investor seeing success, but do your best to minimize them and to learn from them. Next lesson. When the market changes, be ready to pivot. I watched countless people go from being extremely wealthy to literally bankrupt in 2008 and 2009. I watched some people go to jail, and I knew a few that even committed suicide. Market changes have major, major impacts to your life. The bigger the change in the market, the bigger the impact. It is so incredibly important to recognize when something stops working. I talk about this in my Thriving in a Downturn training that I did for Tax Sale Academy members. But slowing down earlier than most people is going to be key, and you need to be able to recognize when something is not working like it should. And then you need to actively seek out the pivot. That's the next major key. My knowledge grew tremendously many years ago as a result of a major market shift. Eventually, I realized you can make money in every single type of market if you recognize it and if you make the pivot. The next lesson is to seek low impact, high reward opportunities. This is a major contributor to the growth in my business over the years. I always chuckle when I see these television shows where they have dozens of people working on a project and they make like $15,000 in a profit when it's all said and done. There is zero chance that I am touching a remodel job for a $15,000 profit when I know the alternatives. And it's not just remodels. That's a super easy example though. My goal in all aspects of my business is to minimize my effort and maximize the output from that opportunity. If I can turn $10,000 into $30,000 simply by putting forth some online marketing efforts for my laptop, I'm going to do that all day long. But if I need to travel across the country multiple times, checking on properties in a high stress environment with the potential of a major issue for that same amount of money or even slightly more, I'm going to skip it. It's not even a question. Time is finite. You will run out of time. Use it wisely. Focus on low input, high reward opportunities. The next lesson is that snowballing your capital will provide you with many more opportunities. It's very easy to get a deal or two underneath your belt and want to pull money out to live off of. And some people will absolutely need to do that. I understand that, especially when they first transition into full-time investing. But you must minimize pulling out any more capital than is required. The more capital you invest, the more opportunities you're going to have at your disposal. The investor who starts with $1,000 is in a vastly different place than the investor who starts with $10,000. And that investor is in a vastly different place than the investor who starts with $100,000 or $1 million. Unless you're starting with $100,000 or $200,000, investing should not start off as a 100% cash flow type business. Allow your capital to snowball some so you'll have more opportunities at your disposal. And the last lesson for today, tax sale investing is a long-term business. If you treat the tax sale business as a short-term deal, you're going to get burned out and frustrated within the first 30 days. Instead, approach it as a long-term wealth-building business. Do not make decisions or push yourself into an investment in a hasty or rushed manner. It will take time to reach your goals, as it will in any type of business. But this is one of those businesses where you're leveraging your knowledge, you're leveraging your credit or your cash to grow it over the long term. Stick with it because it will pay dividends long term if you do. So there you have it. 10 key lessons that I've learned over the years investing myself and helping many others learn this incredible business. I truly hope that this episode provided you with lots of valuable help in your tax sale business. If this episode or any of the episodes that we've launched here on the Tax Sale Podcast have, please do me a huge favor and leave a positive review on whatever podcasting or video platform you're listening or watching me on right now. This podcast is completely free. I don't charge a listing or membership fee or anything like that, but your reviews really help us out, and they might even serve to pay it forward to somebody who gets into this incredible business simply because you took the time to tap a 5-star review or leave a positive feedback comment. And as always, if we can be of any additional help, make sure you check out our website at taxsaleacademy.com. Hey, take care and make it a successful day. We'll see you next time right here on the Tax Sale Podcast. Bye-bye.